Hey guys, Mike here. So, oh boy, I think everybody thought the market was going red. Well, here we go. We're getting this huge pullback. And then that one thing we talked about yesterday, which I said would affect the market, come along and save the day, right? And took us from red on the Qs and S&P, took us back green, took us back to basically flat for the day pretty much. And so I'll show you that right there. Two, we're going to go into something. I'll guarantee you there's a sector out there you never would have guessed is outperforming XLK. You're like, really? That sector? But I want to show it to you because I just want to show you one little tweak in something is like gasoline on the fire, buddy. That's what it is when it comes to the stock market and how the economy, again, is definitely not the stock market, all right? Then we're going to just give you a broad picture after this huge rally up, what kind of market we're actually in, which might surprise you. And then we'll look at, especially one stock today is reporting earnings, just hint, and we're going to get to see tomorrow, I'll tell you what happens tomorrow, whether the technicals will actually outweigh what they say on the earnings call. And maybe if they report good earnings and everybody loves the forward guidance and stuff, and you got technicals aligning, we'll show you the power of that. Or they crap the bed on the earnings call, kind of like Apple did, right? But technicals line up, so it don't matter, and it still takes off. So we'll see and compare that to tomorrow, but I'll show you that stock today. And you wouldn't believe this trend line I'm going to show you, by the way. It's incredible. I actually discovered it today. Now, looking at what actually rallied the markets in the middle of the day. 1 o'clock, the 10-year note auction we talked about, right? Again, I've never tried these in my life, but they matter because when it hits, guess what? Yields crap the bed, right? It actually went fine. This auction went better than the last one. And when that spiked down, remember, it's not about the actual number. It's about how fast they spiked down. So as soon as that big red candle hit, the market started moving back up. Why this is important, we talked about yesterday. Again, last time we had bearish divergence with the RSI in this one, what happened? Yields sold off. Today it actually broke that trend line today, which is not good for it, by the way. And so if that continues, if it's a false breakdown, it's fine. If not, and continues to sell off, you can see I put the QQQs on here. That is jet fuel for tech stocks. Okay, I mean, that right there is a 13% move in 40 days, which is huge. Now, what else does this affect, by the way? With these yields coming down, the Fed not raising rates, mortgage rates. And just look, that don't look like a lot. That's 7.9 to 7.86 to 7.61. Does not look like a lot, right? It's just a little tweak, right? But this is financial conditions loosening. I give this report to members every Wednesday for a reason. When that happens, markets rally, and so do stocks within the real estate market. Look at this. Within just November alone, look at the numbers here. Redfin up 29%, DHI up 16%, Toll Brothers 12%, Open Door 12%, PHM 9%, Zillow 6%. And then you look over and you compare the sector. I use Vanguard Real Estate ETF. Don't ask me why. Let me know in the comments if you got a better sector ticker symbol to use. I don't know why I use that one. But you can see from the 30th when we started to rally through the 6th, this actually outperformed the XLK, right? And then you add in the last couple of days and just look, they're almost dead even. Like just from that little tweak in mortgage rates. That's what it was. That's what happens when they say, oh, the Fed's not going to raise anymore and yields are going down. That is jet fuel. It's crazy because especially this sector has been absolutely beat down and hammered down, right? You get that combination. That's what I'm talking about. Just a little tweak is what you're looking for. And this, again, how is this not the economy? Because you see right here, this came out like 4 days ago. New home buyers can expect to spend about 13.5 years in their house before breaking even on their investment, according to Zillow. And that's because they're paying these crazy prices with these high mortgage rates. Now, looking at the market, you know, no surprise here. You know, you think, man, everything's just up to the moon, looking great and everything. And for the year, this is year to date, okay, on the IWM for these small caps, the Russell is actually down on the year. Even with that rally, it is still down 1.31%. It was down more than that, obviously, before the rally. Why? Because big tech is outperforming it at a rate we hadn't seen in over 23 years, it looks like. And no surprise, right? Because it's the big Magnificent Seven. That's what we call them, the Mag 7. I mean, they're the ones absolutely killing it right now. And I'll tell you how much they're killing it. And, you know, you go to IWC, which is the micro cap. So the smaller a company is, especially in this market where the rates being as high as they are, the worse it is. This one's down 10% on the year. Then you go over to the Dow. The Dow, thanks to this rally, is up 3%. It was actually down for the year, but thanks to the last 7 trading days, it is up 3% on the year. You can see it would have been down around almost 2% for the year. And mind you, we're in November, so the year is almost over, right? RSP right here, which is the equal weighted S&P ETF, is actually zero for the year. Basically, it was down about 3%, but now because of this rally, it's only down about 0.29%. Then you go over here to the S&P 500, and it's had a good year, right? I mean, thanks to this rally right here, it's up about 13%. Was up, I believe, around 8% for the year, and usually the S&P does return what? About 10% on the year. So, no surprise there at all. Then we go over to the equal weighted QQQ ETF. We talked about this a lot, right? It's up 17% on the year. Before the rally, it was still up around 12%, I believe, on the year. And then when you go over to where the real money's at, NASDAQ Composite up around 29%, roughly 30% on this year. And then when we go to the big daddy of them all, the NASDAQ 100 index. This is the one that's heavily weighted towards the Magnificent Seven. It's up a whopping 39%. So again, tech in this market overall for the year has absolutely crushed everything else in its path right now. And one thing you got to keep in mind here, guys. And before we continue, guys, please hit that like button there at the bottom. Give it a thumbs up. Helps people find the video. And if you like this kind of content, think about subscribing. I appreciate all you guys' support. The money's got to go somewhere, right? And what are you hearing a lot of talk about right now? Bond ETFs is one for sure. I mean, a lot of people talking about that. So money go towards that. Money might even start going a lot more into bonds because they want to lock in right now if they really feel like yields are going to drop and stuff, and bond prices are finally going to start to come back up. And so that's one thing you got to look at. See, and I don't know how much money that's going to draw out of the tech sector and everything else. Because you look at, Microsoft's fixing it all the time, new highs. We're going to talk about Apple, Amazon are just blowing up on fire and everything. But the question is how much money they want to continue to put into just 7 stocks. That's really what it comes down to, right? Before, and the other thing is, like, when you're kind of starting to see this, where you're seeing like the PayPals and the Square's been on a nice roll, right? Even Disney, some others that are sitting at these just terrible, just been wiped out over the last 2 years. And money is starting to allocate there, right? Because if things get frothy over here in the 7 stocks, why not put some money over here because it's so dirt cheap if you think they're going to get pushed back up? That's what you got to be able to try to decipher and stuff. And it can be hard. But right now, the Magnificent Seven is what's really getting all the loving right now for sure. Now, looking at the indexes real quick, you can see what's the SPY doing. All it's doing is setting up here, just testing right up here on that neckline. If this is going to be a head and shoulders, there also is a regular RTH gap right there that still hasn't been all the way filled. Again, it's sitting there. It broke through that trend line right there, retested that trend line successfully, which is a good thing to turn it into support. And once again, it seems like all we're doing right now is accumulating. Right now, whether or not we're accumulating or going to be distribution, that's what we got to find out. But you can see right here, that's 4 or 5 days. Boom, you get a next move up. Right, you got to digest the move. That could be what we're seeing right here for sure. Or you see to the left, obviously, you can sit there, accumulate right there, and it's called distribution because we end up selling off. And so, do I expect some big move down? No, because it had to break through all that resistance right there, and I don't see any news coming out that can really affect it, right? Now, the other one is QQQ. What did it do? It sat here and it held this trend line right here, which I call the November trend line, rejected off its October high, right, which is normal. And so, we'll see if this one wants to sell off. Now, understand, it don't have to sell off either. Like, this is January right here when we went on that huge run. You see all those green candles? You see a little bit of a pullback, but that right there was 21% in a very short amount of time, folks. So it doesn't have to pull back. There's nothing in the cards or the rules say it has to, and these pullbacks are very small on the way up right there. So again, just kind of keep that in mind when people are saying, oh man, it's going to pull back for sure. Well, I mean, you would think it would digest it and pull back and fill some of those gaps for sure. There's no doubt about that. But there's no rule saying it has to. And so just kind of keep that in mind. And again, you got all those gaps above, a lot of thrust into this and everything. The breadth in the market sucks, but that don't matter for the Qs because it's not very diverse anyway, right? All it needs is the Mag 7 to keep pushing it higher. We've seen that, and I've showed it to you a million times. Now, this is one reason, too, the Van Eck Semiconductor ETF. Now, if this starts to sell off, you can see we talked about it right here, huge move up, right? Why? Because semiconductors, the Mag 7 is what's pushed it up, right, on this descending channel right here. And so we get to see if we're going to break above this or actually get rejected. On the RSI down there, momentum looks good. You can see right there, it is not overbought at all. And as you can see, that's bullish divergence for sure. And so we'll see if we break above this or take a little breather right here. But if we do, that trend line right above it, I expect to act as resistance because it acts as support for so many other times. And now it should act as resistance as we break back above. So, and it's just right above the other trend line. So we'll see how that plays out. Now, looking at Microsoft, this has been a juggernaut. I want to see if this is going to be a double top. We hadn't quite reached this level here. Do I expect this to play out? Absolutely not. It had too good of earnings and it's too strong. But again, you never know. I mean, it is overbought. Do I expect some kind of pullback? Sure. But you look at that MACD down there, looks really strong, and there's no reason for the Microsoft momentum to slow down at this point in time. I don't see any news or any kind of event. Now, that don't mean there can't be an event. Sure, maybe, but not right now, not to bring it down that far. That would be a crazy drop. What I'm expecting to see is maybe you come back down after you hit that all-time high, test that support line, and then maybe continue up from there. Let me know what you think in the comments. Now, Apple, this right here, I'm going to keep that trend line in place because obviously it already came down one and retested. You can see on the smaller time frames, but I want to see if it's going to come down and retest again because this would be support for sure. But you can see, I mean, it's at a key level right here. It's actually right at its October high right there. So if it can break above that and then come back, retest that, turn to support, that's super bullish as well. And again, it's Apple, so it's treated differently. So, and we're in thin air up here because to the left is all-time highs. Now, looking at the smaller time frame, you can see what I'm talking about right here. Is it starting to kind of slow down the momentum? Sure, it's had a big move. You start going across from the hourly to the 2 hourly to see if you start seeing some kind of bearish divergence and stuff. And, a little bit there starting. Again, it has a lot to play out. But again, that MACD, if it crosses that zero line right there and we get a big push, yeah, this is going to be another big move for Apple. Okay, and again, I thought earnings weren't that good at all, and you see what happened. It barely sold off, and it gained it back really fast. Now, NVDA, the juggernaut it is, continues to push up. We got these October highs. We're looking to break right here. The air is very thin right here. Should it sell off some kind of pullback? Sure, it should. But again, it's not overbought here, and when it does get overbought, it can stay there for weeks on end, as we've seen right now. Doesn't have earnings for at least, another 10 days, I believe it is. And so it can kind of play this out. I swear that's a rising wedge right there when I get on the smaller time frames, but let me know what you think about that one. Now, Tesla, if you look right here on the 15-minute time frame, you can tell this thing is just basically accumulating between 216, 222, right? And then when you look at it, again, what else is it doing? It's just hanging on to the 200 moving average. And you can see what I'm talking about on the smaller time frame. So it's just hanging on the 200 moving average right here. And when we pull out a little bit more, you can see the volume profile, and you can see the support and resistance lines right here. So you got your support right around that 200 area. Resistance right now, it's kind of where it's at, around 222. But if it busts above that, there's that volume gap, right? And then it's going to close that gap at 235. We just got to see, because this is the laggard of all those Mag 7 stocks. I was telling people today, think about the Mag 7 right now is up 108%, and Tesla's down 26% since July. Now keep that in mind. Just think about that. Now, a stock right here to watch out for earnings is Disney. This trend line on a logarithmic scale goes back to 1974. It's never broke it, right? We had it. You see on even the great financial crash, it did not break it. Okay, 2020 crash, didn't even come down and touch it, and that's exactly where we're at leading into earnings. So this is going to be very interesting, again, to see if technicals play out. And the other technicals that are in its favor, it had a double bottom right there, right where the 2020 low was, and also in this zone where it's held support going all the way back to 2014, and it held it again recently, right? And so when you look at this on the daily, it's above the 50, is right there at the 100 getting rejected. And so if it can get above that and break what looks like the October high right there all of a sudden, and then come back down and set a new low, well, that'll be super bullish. Now we get to see, though, because again, they do report earnings tonight. And so we'll see if they got anything good to say on the call. The technicals line up to move up. But again, I'll report on this for you tomorrow. Now, tomorrow earnings, nothing much to talk about. You have Elite Auto, Plug in the afternoon, Unity Software, Trade Desk, Win. And then I'll go ahead and tell you Friday, I don't see anything going on. But when it comes to economic data in the morning, finally we got something. We'll have the continuous jobless claims, right? So if it comes in soft again, that's bad news for the economy, or either this, what they want to call a soft landing narrative is playing out, then that'll boost the markets, right? You have plenty of Fed speakers coming out. Then at 1 p.m., you're going to have a 30-year auction going on for the bonds, and so that'll be a big one to see. If it comes in like the 10-year did today, expect yields to drop again, markets to rally, and then Fed Chair Powell will speak at 2. And he was actually doing something today with remarks, but he took nothing when it comes to economics or anything else that would affect the markets at all. So I don't know what he's going to talk about tomorrow. We'll have to see. Maybe he's not even going to talk about anything with the markets. A lot of people are expecting him to talk down the markets and stuff, but I guess when he was asked questions, he said, I'm not even going to get into monetary policy or anything like that. So again, just keep in mind, if the 30-year auction goes well and it comes in less than the last one, you'll start to drop. Markets are going to rally or at least hold, right, at 0, right? And flat's fine for them because accumulating for the next move, that is normal, okay? I think a lot of people are probably saying, come on down and fill some gaps and then push. But, this is one of those things we talk about where everything's horrible, horrible, horrible. Everybody's short. Everybody's doing all this stuff. And then, like I showed you with the mortgage rates, little tweak. Remember, the yields could stay exactly where they're at right now. As long as they don't move up in a very quick fashion, the market's like, cool, that's behind us. Fed pause. Great, we're good to go on that. They ain't going to raise in December. They're expecting no more rate hikes, right? And so that is fuel to the fire for the market, whether anybody likes it or not. It's going to keep going. We'll have to see, right? And of course, what's the market? It's basically 7 stocks still, maybe 10. But, other stocks are starting to get some love. Again, we'll see. And I'll tell you this much. If Disney gets some love on that earnings and starts to move up, then I'll tell you something. Okay, because that thing has been in the gutter. It just lost all its gains going all the way back almost a decade. Okay, and that's not even a tech stock, for God's sakes. Keep that in mind. So just something you got to keep in there. It's not about being bullish or bearish or anything else. It's just looking at what's happening under the hood. Okay, and so because remember, if you look back at any recession, pretty much, what's the market doing when you go into the recession? It's running up. It's running up because it's not the economy, and because I'll call it the last hurrah rally. If we go into that, if we go into, I can't predict a recession, but I've done videos on this for the members where it's like, I say it's greed, right? Like they know what's coming. They can see it. Look at 08. You don't think they saw that coming? They knew what was coming. Foreclosures were going rampant before the market tanked, right? But they ran that summer gun right up into the last second and crashed it, and that's kind of how it works. But we'll see. Again, we have other alternatives. People going into bond ETF, people going into bonds, stuff like that. So, and crypto's raging too. So, we'll see how it affects the stock market. So let me know what you think down in the comments and stuff. Please hit the like and subscribe button as always. I really appreciate all you guys. Hope you have a great night, and I will see you tomorrow.